Hey everybody, it's Jack and welcome back to another video. It's finally time for another portfolio update video where I'll be going over my WealthSimple challenge and how it's doing, where my goal is to bring a $1,000 account up to $100,000 through saving like crazy and smart investing, with the goal of one day being able to retire off of my investments. I know it's been a while since I last uploaded and I apologize for that. It's been a crazy busy month over the past month for me. I spent a week or two at a family cottage hanging with my family and just relaxing, and then I ended up moving to the East Coast to visit my girlfriend for the rest of the summer. So you see the background is a little bit different in this video, and that's why I had to quarantine for a week and a bunch of stuff going on. And on top of that, I started a brand new 9 to 5 software engineering job, which has been taking up a lot of my time. So it's been a little bit of a hectic month, but now I'm able to finally carve out some time to get back into making videos for you all. So let's kick it off with this portfolio update video. It's been a month, so a lot to update you all on, and let's jump right in. So over the past month, even though I haven't been uploading, I've been continuously investing each and every week. So I've been buying more and more shares in the positions I own, as well as maybe starting some new ones that I'll get into. And I've also been doing a little bit of selling in one or two of my positions, and a lot has happened with some of these growth stocks that I have in my account, along with the dividend stocks, which will all be covered in this video. So let's kick it off with my account status. So as far as the account status goes, the account currently sits at $9,010.08. So it is up quite a bit from the previous update video, as we have continuously deposited, and the appreciation in the actual stocks has gone up as well. We had a good bounce back day on Friday, up $82.85 or 0.93%. But for the actual week, we were still quite down because the market did not do too well early on in the week. So we were down $8.55 or 0.09%. For the month, we were up $130.26 or 1.47%. So it's been a really good month for the stock market. And all time, we are now up $467.25, which equals to 5.47%. So the account has actually been doing really well over the past little while. We're really starting to see the snowball effect and those dividends come in and being able to reinvest them into some of my favorite positions. And again, that snowball is just going to continue to grow over time, and I'll show you exactly how it's been performing. So before we dive into my spreadsheet where I track all of my stock positions by the numbers, as well as show some really cool charts and visualizations to show my progress over time, let me first just give kind of a higher level overview of what I've been doing over the past month and some of the highlights in the account. So first and foremost, most of my buying has been primarily focused in my dividend stock positions, boosting them all up over the past month. When certain stocks dip, I try to capitalize on that, picking up a share here and there. A little bit more exciting news when it comes to my growth stocks that I hold, and there's been a lot more movement in those. First and foremost, Standard Lithium has gone absolutely crazy over the past few weeks. The stock shot up from being in around the $4 range to all the way to past $8. So I'm going to be diving into this one and showing you what I've done over the past month in terms of Standard Lithium. Have I been buying? Have I been selling? Do I even still hold Standard Lithium in my portfolio? I've also been building up one brand new position in my portfolio, that is Data Communications Management Corp, DCM, which I featured in a full video here on the channel around 2 months ago, saying that I was going to be adding this to my portfolio, which I've been doing and just consistently building up my position, buying 5 or 10 shares every few days here and there, building up the position and really dollar cost averaging. So that's definitely one of the major updates in the account, which you'll see. And then in terms of actually selling some of my positions, I have completely sold off one of my positions in my portfolio, one of my growth stocks, and it is MCI One Health Technologies. DRDR is the ticker symbol. And the reason for this is actually because the volume on the stock was so low that it's no longer being traded on WealthSimple Trade. So I was no longer able to actually buy the stock on WealthSimple. And for me, as a long-term investor, somebody who dollar cost average into my positions over time and continuously buys shares here and there, I didn't really like the fact that I could no longer buy shares of this company on WealthSimple Trade. So for that reason, I actually sold out of my position on WealthSimple, but I actually did rebuy it on TD. I do have a TD direct investing account. So I actually repurchased my shares there, as I do think it is a really great stock moving forward. So that's kind of a high level recap of what I've been doing over the past month and the major updates in the account. But let's now jump in and show you all the details by going through my spreadsheet where I track my passive income as well as the breakdown of all of my stock positions. So now we're diving into my spreadsheet where I track all of my stock positions, and I can update you all on how my positions have been growing over the past month or so. So as I've mentioned, I've pretty much added to every single one of my dividend stock positions. I think I actually have added to every single one. So I'm not going to be going through them all. I'm just going to highlight some of the major players and some of the ones that have had great movement over the past little while. Algonquin Power and Utilities at the top, ticker symbol AQN, has actually been doing extremely well. I think the utilities sector as a whole has been slow to catch up to the rest of the market. So we saw that Algonquin Power was really down in the $18 range for a while there, and then slowly getting through the $19 range. And we can now see that the current price is sitting above that $20 range. And this was one that I was down on for quite a while, and I am now actually just barely in the green on this position, and it's still one of the biggest positions in my portfolio at 8.2%. The next major player in the account that I've been adding to a little bit more aggressively than the rest has been Manulife Financial, ticker symbol MFC. Manulife is another great dividend stock that has a great track record in the past of not only raising its dividends, but also seeing good share price appreciation, which, as you know, is really the sweet spot that I try to get with most of my dividend stocks. And Manulife over the past 6 months hasn't done too hot. It actually trended downwards. It was sitting around $26 to $27 per share. It then slumped down all the way to below $24 per share. I kept dollar cost averaging into this position, and I'm now, just like Algonquin Power, just slightly in the green. So Manulife currently makes up 6.1% of my portfolio. The next dividend stock that I've added to a little bit has been Kirkland Lake Gold, ticker symbol KL. This is a gold mining company, and my reasoning behind adding more to Kirkland Lake Gold, and I also plan on adding even more in the future, is the fact that we are seeing the stock market trade at those all-time highs. We just keep going in the upwards direction. And I am a little bit wary of, are we going to start to see a little bit of a correction to the downside in the next few months? Starting to add to more of my hedge positions, which is Kirkland Lake Gold. As we all know, gold is a great hedge against inflation and the stock market going down. And this is a great company that I just think will grow no matter what in the near future. That kind of wraps it up for dividend stocks. And just again, I've been adding to all of them over the past month or so. And as you can see, every single one of my dividend stock positions right now is actually in the green for me, which is pretty crazy. You know, not too long ago, some of these Algonquin Powers and Brookfield Renewables were sitting down, over 10%. So they've really recovered nicely. And again, that's just why you dollar cost average into positions over the long term, which is a good segue into our growth stocks, which are the only stocks that are actually in the red for us right now. 4 out of my 5 current growth stocks are actually in the negatives, which is ironic. Always I say that my growth stocks are not growing. They're actually going down. But again, this is where I actually see a buying opportunity in the current market. I think the really large cap stocks, like all of these safe dividend stocks, are at those all-time highs. So it's a little bit harder to find good value in those stocks at this moment. So for right now, I actually think there's a great buying opportunity in growth stocks as they are still trading down quite substantially from their all-time highs. So I'm currently down on H2O Innovations. However, it has recovered really well over the past few weeks. Ticker symbol HEO was trading down around $2.20 for a while. Over the past few weeks, it's seen a really nice rebound. It actually was around break even for me at one point. It's now pulled back a bit and is at $2.65 per share, and it currently makes up 3.8% of my portfolio. The second growth stock on the list, Good Natured Products, ticker symbol GDNP, has also been struggling as of late. It's currently sitting down over 15% for me. However, it only makes up 2.1% of my portfolio, so it is a much smaller position. And I have been adding to this one. I've been adding 5 or 10 shares here and there when it's trading in the lower 90-cent range. I think this is a good one to hold for the long term. Again, this is a company that deals with renewable and plant-based alternatives to single-use plastics, which I just see being a great opportunity in the near future as Canada and North America in general really starts moving towards these more sustainable options. Another one of my growth stocks is Greenlane Renewables. Again, this is one of my favorite growth stocks in my portfolio to date and one that I'm really bullish on long term. I've been adding to this one 5 or 10 shares, again, just like Good Natured Products, over the past few weeks as it has been trading down. At one point, Greenlane Renewables was actually in the green for me. It hit around $1.90. Since then, it's pulled back to $1.47. So this is one that I do have on my watch list to continue adding to this position. It currently makes up 3.1% of my portfolio. And the next growth stock, the one that I'm sure a lot of you guys have been wondering about, is Standard Lithium, ticker symbol SLI. This is one that has been going absolutely crazy. It's been extremely volatile. I'm sure you've been waiting to see what I've done with this position. And as you can see from my spreadsheet, I currently only own 5 shares of Standard Lithium. I have sold off the majority of this position over the past month. I began selling off this position slow and steadily. Every 10% it went up, I would sell off around 5 shares. I had over 100 shares at one point. It's had a lot going for it over the past few weeks. It uplisted into the United States. It's now trading on the New York Stock Exchange, I believe, which is great. That really got some momentum on the stock and carried it upwards. It hit above $10, maybe even above $11 at one point. For me personally, I began to sell off a lot of the position between the $8 and $9 range. This was in a range that I began to think the stock was a little bit overvalued. It's currently trading up over 100% for when I actually initially bought in. And the reason I kind of sold off this position was I think it just got a little bit carried away with the evaluation. Like, this is a stock that is currently trading at a market cap of over $1 billion and is a company that is not doing any revenue to date. They are a pre-revenue company. They are still just in the exploration and kind of perfecting their lithium extraction process. This is a company that is not selling any of their lithium as of right now. So personally, I believe this company is a little bit overvalued. It's very volatile. It's been going up 20% and down 15% here and there. It's just been trading and swinging like crazy. So definitely be cautious with this one. Don't get me wrong, Standard Lithium is an amazing company that I think is going to do really well into the future. For myself personally, I think it just exploded a little bit too much. It kind of went up too high, so I sold off the majority of my position, taking profits off the table and just locking in an above 100% return on the majority of my shares. And now I'm kind of waiting for it to hopefully drop back down to between $5 and $6, and I would definitely start to buy back in that range. However, today I just think the evaluation doesn't make sense. And then now we're getting into my brand new stock position, Data Communications Management Corp. Like I mentioned earlier in the video, this is one that I've been dollar cost averaging into over the past month. I've just been buying 5-10 shares every single week over time, just slowly averaging into this position. As you can see, I'm currently down over 16% on Data Communications Management Corp. As it's had its earnings report come out over the last few weeks and it didn't do too hot. There were some aspects that were really great about the earnings report, some that just didn't meet up to expectations, and the stock began to sell off quite dramatically. So I am still buying the stock to date. I still believe in the future of this company. And the new CEO, I really think he is going to turn this company. And I really think this is going to open up the door to many opportunities. And I actually reached out to Data Communications Management Corp over the past week, asking if I could sit down with the CEO and maybe record an interview with him, asking him some hot questions that a lot of us probably want answers to. What's going on? What's the future have in store for DCM? So I'm hopefully going to sit down with him over the coming week and have a video for you all. So stay tuned for that. As Data Communications Management Corp currently makes up 2% of my portfolio. And that wraps up the 5 growth stocks in my portfolio. I do have my ETFs at the bottom here. I haven't done a whole lot with my ETFs, as again, the stock market is trading near those all-time highs. So I have picked up 1 share of my S&P 500 ETF. Now hopping into the charts as well as my dividend tracking. Starting it off with my dividend tracking, we can see there's a big change from my last update video. My current annual passive income from my dividends is sitting at $265.73. So we can see almost a $100 difference from adding my dividend stocks over the past month, which is crazy. And the monthly average is now at $22.14. So remember, this is income that is going to be coming in every single month for the rest of my life, as long as I continue to hold these great dividend stocks. And it will probably grow as they raise those dividends. And the actual portfolio dividend yield is now sitting at just over 3%. A while ago, it was down around 2.7, and it's now over 3. And that's just because we've been adding more to dividend stocks than we have growth stocks. If we now jump into my portfolio breakdown chart, where you can actually see each stock position and how much it makes up of my overall portfolio, again, we can see that a lot of the sweet spots are around that kind of 4 to 8% range. That's where the majority of my individual stock positions make up in my account. And as you can see from the chart, my largest positions currently are Algonquin Power at 8.2%, TD at 7.6%, TELUS at 7.7%, and VDY, which is just a really great ETF for dividend and passive income, as it sits at 7.6%. And if we just quickly now go over my sector allocation chart, we can see that utilities, financials, and the renewable energies and just renewables in general all make up around 13% of the portfolio, as well as my growth ETFs and safe ETFs also make around 10%. I am going to be trying to add more to some of the lower weighted sectors in my portfolio, such as technology, as well as my real estate investment trusts, really trying to boost those up over the coming weeks and focusing on some of those. And the final chart in this spreadsheet is my asset allocation chart, where I really just see the breakdown between my dividend stock positions, my growth stocks, and my ETFs, and can kind of see the weightings that each make up as a group. So we can see that my ETFs make up around 22% of my portfolio. That's kind of where I like them, in the 20 to 25% range. Just add some long-term stability to the account. And then my dividend stocks have really ballooned like crazy over the past little while. They're now sitting at over 66% of the portfolio at 66.4%, which means the growth stocks are taking up a lot less to date, as they're sitting at 11.6%. And again, the main reason for this is I sold off a lot of my standard lithium position, which was one of the largest positions in my portfolio. I also sold off my entire MCI One Health Technologies and moved that over to my TD account. So that also took out a little chunk. So that's why I'm going to be focusing a little bit more on growth stocks moving forwards, the more attractive part of the market today, as a lot of things are trading near all-time highs. However, growth stocks are still trading quite down from their all-time highs. And finally, moving into my weekly watch list for the week ahead. So what stocks am I going to be targeting? Like I mentioned, for the growth stock positions, I'm going to be continuously adding to my Data Communications Management Corp. This is my newest position. I'm just going to continue to dollar cost averaging in, probably picking up 10 to 15 shares over the next week, as it is trading down after the earnings report. And then Green Lane Renewables as well, ticker symbol GRN. This is one that I'm most bullish on. I have a lot of faith in this company moving forward, as I do think renewable natural gas is going to be a huge play as the world needs to move towards more sustainable options in order to save our earth. So I'm going to be add 15 to 25 shares, hopefully below $1.50. I think that's a great buying price, as I do see this as a $3 to $4 stock in the next year or two. And then, as I mentioned, I want to boost up my technology a little bit more and add to my NASDAQ 100 ETF, as this is primarily technology based. It has the largest technology companies in the world within this ETF. So I'm going to add one more share of QQC.F over the coming week, hopefully. And for dividend stocks, I'm going to be focusing on some higher yielding dividend stocks, as I do want to kind of counterbalance the fact that I'm going to be adding more heavily to my growth stocks by adding to fewer dividend stocks, but adding to the ones that have high dividend yields. So Enbridge is the first one, ticker symbol ENB. I'm going to be adding one more share of Enbridge. It's also on a little bit of a dip right now, so it kind of works perfectly. So hopefully it dropped down a little bit lower to around $48. I'll pick up one share. I think this is a great price for Enbridge. Anything below 50 is something that I would definitely buy into, as you are locking in around a 7% dividend yield. And then the final stock that I'm going to be adding to next week is Smart Centers, SRU.UN. This is just a great real estate investment trust that pays monthly dividends, which is awesome. Its dividend yield is over 6%. So I'm going to hopefully add one or two more shares of it in the following week. And that's my weekly watch list. So to recap, next week, I'm going to be focusing on a balance between growth stocks and dividend stocks to be added to in my account, as some of my growth stocks have kind of slipped over the past little while in their weightings in my portfolio, as I have been adding more heavily to my dividend stocks. However, with most dividend stocks being up near all-time highs, I think this is a really good time to start to add to some of those undervalued growth stocks in my portfolio. So that's what I'm going to do. I'm also going to be adding to some of my dividend stocks, but to the ones that pay a really high dividend yield. So my Smart Centers, as well as my Enbridge. Those are really safe bets when the stock market is trading near all-time highs. At least if those stocks are going to go down in the near future, at least I'm still getting those high dividend yields. So that's kind of my thought process moving forward. I hope you guys enjoyed this video. I am back. I am going to be making lots more videos in the coming weeks. I'm excited to be back making videos for you all. But if you guys did enjoy this one, make sure to smash that like button. And as always, subscribe to the channel if you're new. Lots more videos coming your way. I'll catch you in the next one.